Hello everyone, it's me again, Sam Wong. A week already passed. I hope you have a good weekend so far. And last week you were able to make some good money because the market actually basically have driven the momentum higher with strong earnings and was better than the previous week. So if you have bought at the dip, which is what the market always have said, you will have made pretty good money. And again, the rule will be I'll walk about 20% if you're looking for short term, maybe even not 20, because sometimes you hit that 18%. I will walk and happy with 1 week or 2 weeks, less than a month of profit, or 18% is really phenomenal. And you know, in historical theory, pre-pandemic, people typically in Dow Jones Industrial Average or our major index average is about 15%. And if you look at the 10 years, 15 years trend, which most people recently have not been bought up, you will get the average about 12% to 14%, depending on which index you're talking about. That's just an indicator of if you have buy the index and the average of certain stock they live along for a long time, not necessarily high tech and growth stock, in general. So 18% is considered really good return in a short period of time. Um, so, and I want to show you this before I move on because the latest last couple of weeks, there's a really a hot topic talking about oil and gas. The natural gas and power prices considerably surging in Europe and bringing a little bit concern in U.S. and especially in China power. Some plants have been shutting down because to reserve energy, and now they're trying to buy more coal and hopefully to do the best government to prepare for the winter time, so everybody will still be able to stay warm. I think this is very critical, important, policy that that the government really considering, right? Not like America would say, "Oh no, we don't worry about it." This is really free enterprise. Okay, so people don't have money to afford it. Okay, too bad you're gonna die, right? So I just can't accept it. So in certain extent that, right, I mean, God, you already pay for the tax and corporate tax, got income tax. You really pay your dues and expect the government help managing that space, but sometimes it's just hard to tell what are they thinking in mind. So the rising price, however, more is a sentiment speculation than a reflection of supply demand fundamentals. So you can see the prices. If you look at 2 months ago, the price is only at $60, and recently had really gone up $80 now, the record high over the 7 months. So it was remarkable. And if you look at earlier year, I mean, it was even at around $40. And if you recall last year, about May timeline, even half the negative, oil price actually even reaching negative. So the rise, yeah, and why do I say this is kind of more like a speculation? Because I kind of guess by the data, gasoline demand in September fell actually 3.35%. The economy is still impacted by the COVID virus, even though, I mean, I wouldn't dispute that, yes, it's really trying to more economic open. When you go outside now, you really get more cars and more crowded, people around in the mall and the dining area. People probably go to the bar. I don't drink, so I don't know what how crowded it is in the evening. Refinery utilization last week was 89.6% according to the EIA. So the EIA showed a gasoline bill too. So these data do not indicate supply shortage currently, nor in the near future. If there's shortage of natural gas in the United States, many natural gas power generators that produce electricity could switch to oil as their fuel. Typically, natural gas can be the source for about 40% of all U.S. electricity generation. So this speculation really create an environment on pushing the price higher. The global squeeze in energy supply has forced a shift to oil, which might increase demand for crude by 500,000 BTP, the IEA added. But I don't know, again, is this always funny that this type of forecast, 1 week is up and 1 week, another week is going to adjust down? For those who are betting on this anomaly, you have to be careful about the revision of forecasts and increase alternative fuels of supply, and that, you have to think flip and or some of the major giant, power, and really get together, talk about how to control the power price out of our rack, and then really will have a risk of really not even enough supply for the coal, then the price could have driven down. You'll be surprised. We have seen it before, right? So just have to be very careful about this speculation. And then that's all I can say. And then I would, before I walk about the what happened last week in the market, I also want to talk about a few stock. It seems to be interesting that when every time I bring up about the stock will actually gone up. And if you look at the Tesla, oh my God, it have gone up so much now. It's like $846. When I showed it was below $800. So it was a remarkable raise in a week or so, on what I bought it up about Tesla, historical return. So I think, if you don't have time, at least you can go to Google, all these, free engine to look at some specific stock or index you're looking for. You can click easily about, hey, I want to look at what happened in a week, a month. Technically, for some reason, I really like 2 weeks, but they don't have it, unfortunately. So, you may have to look at 1 month and look at that, and then you go from that 2 weeks and trying to see where the price, high and low end to figure out what's going on, and using that as a 50-day average, roughly, as long as you see graph more, you'll be better and better, and you really would know the market, and whatever you're looking at, you're going to track about the performance. So then you will get better. Just trust me. Then you don't really need to download calculating the 50-day average. You have some clue about around what range the prices really retain. So what I would like to, I'm showing you these stocks because I realize every time I show this stock, and we end up actually going high, even though I told you not to buy and wait for another 5% or 10% slip. This one I tried out and I'm really particular liking it. This is a EV truck. So it's similar to XP, Cellpang, NIO, and Tesla, except it's focusing on truck. You really have, right now the sales is, I don't think they have any sales. It's still in a startup phase. They are going to build in Austin 500 employees, if I understood correctly, to really build the ground up. So they the stock actually through raising money for SPAC, and at a year, 52 weeks high, well, actually more than a year, it will be a year and a half ago, the stock have gone up to $52. For those of you who have watched and been following my video, you know what I'm talking about. So from $52, drop it very quick to 40. From 40, drive it down to 20. From 20, down to $10. And you really at this low level, that's how I bring it up to people to recommend buying them. And then really the last time somebody who have made some money, about $8, $8.50, I was recommending buying it. And you go up to $11 and say it's about time to sell. You will make a pretty good return on that. On long-term range, I'm still optimistic about this stuff, but again, 2025 would be the target time where these EV stocks are supposed to be picking up, and hopefully, again, the key thing really about these stocks to make money is really scalability. They're gonna make enough so then the overhead cost will be reduced to allow for that attractive to price per vehicle per se will make money off of it. So the stock right now, without any news and anything drivers, the last week dropped down to 680 on this stock. So because I don't do the video every day, so I wouldn't be able to tell you to buy around the range, and then you rebound very quickly back to 750. So I looking to this stock, and the earnings announcement is going to be November the 1st. I really think this stock will go back up to $9 plus. I'm not sure they will go up to $11. That kind of high end, but $9 I'm pretty optimistic about it. So from a technical perspective, 52 weeks. I mean, this is giving you a high side of 6 months, and then you can click and research yourself. What happened to 1 month? What happened to a week? The stock had been, really at one point was about $12.50, $13 range, around second quarter, and then you tip it back down to as low as 680. So it's really kind of a little volatility, but you look at this graph, I'll definitely telling you it's a downward trend. But if you look at a 1 month chart instead, you will see you actually have a little upward trend and drop back and upward again. So I think this stock again will be something good to hold for long term. And you just look at the year perspective, 1 year perspective. The high end was $30. If you're looking at discount, right? If you talk about stock to give you 50% discount, which is a good undervalue, will be $15. Well, this stock is another $15, another half discount of the 15, you get a 750. And again, last week was really at the low end of 680 that hit the year-end low, and I really think this stock will not going to go down low that much. So, and the PE ratio actually look pretty good, 282, not a bad numbers. And market cap have one, the market cap wasn't good numbers anyway, because you're really taking the current market price times outstanding shares to come up with that number. So if the stock value higher, of course the market cap going to get bigger. So this number is not, I'm talking about $20, talk about that, that's will be like 2.5, 220% higher than this number, which will be then at, like close to 3 billion market cap. So this number I wouldn't bother with it. Okay, and the past 6 months again, they went down 12%. So I mean, I'm looking at, if you hit back to $9 at this level, you get back about 12% here. All this will be, all these losses will be gone. And again, I own quite a bit of this stock from $52, buy at 40, and buy it at 20, buy it at 10. So our average yield still a little higher, around $11, $12 ranges. I still believe this stock in the long run, it will take off. But again, long run, just bear that in mind. That's a key word. The other one, this one is XPEV. If those who listened to my video last week noted that I have brought this up before. I said every time if you get closer to earning announcement, there's some momentum driving these stocks will go on back up. Well, fair enough, the last week when I talked about it, XP was around 37 last year. You can go back and look at my video if you don't believe me. And now you go back up to $42. So you actually will literally, if you click a 5 days range here, you will actually tell you that you will have made about, I think about 10%, in a week. In a month, I think it's actually still actually slipping down, because it wasn't doing as strong as it was slipping from around this level. For those who listen to my video, slip it down to $35 range. So this stock again, when they were a year high, is at $75. At one point, these EV was really hot, so it had a very strong momentum driving it. 1850 pretty much that was the time, about IPO time range, and you really at low as probably $23 would be around the time you were able to buy it last time anyway. In last round, if you have bought it and hold that, you actually have quite a bit of return if you bought at 23 hold up to this point. But like I said last quarter, I recommended selling around that time. You will sell around 40-ish anyway. So really, it kind of flat from quarter to quarter basis. If you're bought it around that range, you are kind of flat right now. You didn't make money and not losing money. And again, I wouldn't necessarily recommend buying at $43 right now, but just something to bear in mind. If next quarter come around, these type of EV stock, if they drove down the momentum back to $30-some, for the short period of time within 2 weeks, right, or even a month, you have potential can make 12% easily, which will be good to invest from that short-term perspective. In the long term, again, year 2025 is the time to talk about scalability. So you have to at least look at 20 or 2023. That hopefully this stock will hit back to $75 to $100 range. If you listen to my video last year, I was still optimistic about XPEV that will be hitting $100. But see, I'm training a lot of investors, the people who listen to my video more for short term rather than long term people. So time is the best proof. So 2 years from now, if somebody see this stock here over $100, then say, hey, Sam was right, because 2 years ago, we can pull back to this video and say he did recommend buying that, and he just saying that in 2025 scalability. So you will take time to get the percentage of return that you're looking for, because it's not necessary for people. Some people really want short-term one than trying to hold them long-term. I would say just start wait until after earnings announcement. If you dribble back to $30-some, I may buy it and hold it for long again, depending on my cash positions. The next one I will talk about, since every time I talk about the stock, and then you will, regardless, you will go back up. I think it's a perfect opportunity to remind November 11 again. So it is really only little less than a month to hit that range. If you look at last year, Pintoto in October 15, it was actually driving the stock up from $70 hitting 90 plus. So in a very short timeline, then after November 11, it got dropped down a little bit and they push up further. So it's actually over $100 range if you could look at last year timeline of the trend if you're interested. Then for some odd reason after a quarter or so, this year was strong again. It were at literally at one point you really hit a high of $212. Then of course with the China delisting, tariffs, dispute between, poor relationship between China and U.S. The stock have been really pushing a sell-off position, and it was really as low at, if you notice this, I highlighted the timeline October 4th, and actually in the one before, which is around August timeline. Late August, it was even at $75, which really the lowest you would get. But then the $75 actually the next day already rebounded way away at the low end 75, and then surely in a month timeline, you hit it back to $80 to $90. So you just give you some timeline. Chinese stock is very volatile, but I'm looking at some opportunity there. I recommend people who bought it, it wouldn't have 212, maybe 170 at a time, which is still kind of high. but then how to buy more and more, so to average it out. So right now this stock on my average now is still $110. But I look at this stock will be, if not in November 11, it will be next year Chinese New Year. Hopefully we hit back to $120. As up to me, it's a more reasonable range where this Chinese stock should be positioned at. But you never know, maybe that's hot enough to push the momentum back. With the relationship, I just look at the media and got the news that, reading the Foreign Affairs Commerce Department saying and confirming that the talk between China and U.S. again about tariffs and future how to do business is started again. So that would be probably positive for all these Chinese stock, regardless of which one you look at, when pushing the momentum and optimism to drive them up. So with November 11 coming too, so that may be a double help on this stock. So I hope you will have the momentum driving back up to that. And you see, if you're holding the stock in 6 months, this stock is losing 30%. So then having said that, meaning you already buy, if you bought it today, it's with 30% discount off what somebody bought 6 months ago. And again, this one may have to hold a little longer, but potentially we have that. $75 will get somebody buying at this point, but probably people at the time will be fearing about Chinese stock, dumping Chinese stock, thinking Chinese stock is no good. So, and then you look back, maybe now you're at where $90 is more reasonable level, but I really think this stock should be over 100 plus. Then the next one we'll talk about, which is Disney, which I also talk about it, the Marvel that came up earlier, which give them quite a bit of $1 million of revenue potential in the Disney Channel, which really help the company. But I hate to say this, somebody not gonna like what I said is, that Marvel movie seems to be a little bit disappointing, and there's another Marvel coming up again. So I really hope they were making the content and substance of the stock of the movie, the Marvel movie, better and better. So then you have a really something called like a classic, that people really enjoy and think that, this is awesome Marvel movie to even hit record high of the sales. So I think there's some good movies coming with Disney. Disney just thought, if you look at it, there one time, if you look a few years ago, there was a low at $40. It's always because they come up with a good movie, they're doing strategical change and reshuffle with some new toys. The management is amazing in Disney, that they have always were able to do something to drive the change to save the company. So even in the pandemic, most of the stock actually up, which Disney actually did if you bought it $110. But it wasn't really high enough because it wasn't even doubling, right? It should be at $220. In fact, this Disney stock also were struggling from $140 drive it down to as low as during the pandemic were hitting because the theme parks closed to down to like $90-$80 range, right? You have to go back on that. So then from there rebounding it up to $176 there. So you can make the argument you double if you bought that at the dip at that time. So, but then I think this stock had more than that. If Netflix, think about it, Netflix can from nothing like really low, like $40, $50 to down to like $500 today. Well, why Disney, which have a lot more theme park substance into it, more diversified business, would only be not even a double, So I think they all actually, in a sense, I didn't do the stock valuation, but I think in the future, when everything reopening, you look at the revenue go back up again as the pre-pandemic level or even higher, this stock got to be over $200, no question asked. So I'm still looking at, even if $200, let's do the quick math, this is only another 13% to go. And Disney does take a while, a long time to drive out like bowling. It wasn't really in a day or two, you can see the effect going up very quickly. So I think right now maybe it's a really good time to buy, and when compared to 6 months ago, even 6% lower. Even despite Dow Jones Industrial Average right now was really high. But but remember somebody says Dow Jones may go up to 40,000 end of year. If assuming that, end of this month, if October doesn't crash in November, they still pick it up with still a strong support over there, which we don't know. I mean, that's just the thing about the risk about October, the curse, right? And the next thing is, so just again, I hope this stock will also pick it up to over $200. I would say in Christmas time, where people are going to go out, to enjoy entertainment. People will, you will go to the movie theater, and for them to benefit from, from the new movies, the new characters that come up for sales during Christmas time. People will buy those for people who love the Disney items. And they're sure they have a cruise line as well. On the next one, Dow Jones Industrial Average, just giving the momentum, looking at 1 month perspective. Despite the 2 weeks ago, the Dow Jones have been paralyzed and with whatnot reasons and fear of the tapering and the weak data supporting sales, and the unemployment and the payroll number wasn't looking as optimistic. Trump drive in August timeline in the beginning of October. It actually did come back up. If you look at I only clicked 5 days, but 1 week, we all know that Dow Jones actually have picked it back up very solid and strong and come back. So give you a 1 month perspective that even with the up and down, you can see the previous week here, when dropping down seriously, in a downward trend here. And then here's another, the week before, right? So this is this week. The last week, the previous week, it was actually in the downward trend. It was picking up very solidly. So with the good, there's some drivers which we'll get to when you go to the recap. So if you look at 6 months, it actually was a pretty good return again, over 2-digit percent return. So we'll see Dow Jones Industrial Average. I haven't heard about 40,000, the metric number, for a long time, last 2 months, but you could, if the market momentum pick up, somebody would say, yeah, still look at Dow Jones Industrial Average 40,000, why not? And then next one also give you some indicator, right, with another index just to give you 1 year. In a year return in terms of S&P 500 is still remarkable 20% return. Despite the last 2 weeks, we see up and downs and kind of roller coaster and such. In the office last week was really picked back up, rebound. Even in intraday, there's always volatility. You can see that the market were actually pretty strong, solid level again. Over 4,500. close to 4,500. So I'm still looking, and you will be picking up another 250 points easy. Will be maybe get to 5,000. We'll see if we're gonna hit. We'll see if you're gonna hit there. That would be interesting if it did, right? So, but definitely, you'll be very close to hit another record high if you've gone up and pick up the momentum for a week with the earning announcement solid and strong and surprising the market. Sometimes you have to surprise market to make the thing keep going up. You will hit the record high again. Then the last one I want to touch base on Nasdaq. Nasdaq obviously the week before was getting a lot of pressure because of yield curve changes in the higher, because of potential asset tapering, and then the discussion of the debt ceiling. selling. But regardless of that, if you look at the year return, you will still, this trend, you can still get 1 year over year today. It's still, even though there are ups and downs, overall, if you draw a line here, you're still on an upward trend all the way, right? So, and it's pretty close to, 52 has a 15,403, which actually have about 500 points to go, which is about another 4%. So its potential can be done. We'll see if you're going to drive higher with all the earnings for following week. But I think every time when I bring those up and talk about this type of thing, it actually is a positive, and you really drive the market higher, in a way. But October, you have to be very careful about what's going to happen. And I'm going to quickly capture the recap, and then we'll give you some what I'm thinking the upcoming weeks and how things are looking and what I'm really thinking, to be stronger at. And meanwhile, I'm still going back to the Dow Jones Industrial Average graph just for that to know. So US stock were mostly lower in early money trading as investor grapple with a continued rise in inflationary pressure and the outlook for slower economic growth. Bitcoin surged for a 5-month high from Monday, climbed back about 57,000 to outperform the broader cryptocurrency sector. In fact, the cryptocurrency continued to rising up. That is what helping in the Tesla to get the price over $850 a shares. And Bitcoin currently is about $61,132 a coin. And the market remains very volatile, but Tesla was doing very well. Many Chinese stocks remain very solid, and Nasdaq was up by 0.73% given the yield curve pullback. US stock rose, Thursday again. Wednesday was kind of dip a little bit, and then with some volatility. But stock rose Thursday as earnings season pick up pace, even inflation climb and the Federal Reserve edge closer cutting back is support for the economy, which is the asset tapering. The yield on the key 10-year U.S. Treasury note was down slightly on Thursday to 1.539%. That was the major driver why Nasdaq was going back. Half the start of the week about 1.6%. JP Morgan posted profit at top estimate driven by surge in deal making. In another report on Thursday, the labor demand set its producer price index for final demand rose 0.5% in September, which is smaller than forecast, who perceive as a positive for investors. So while we do have an inflation, we have a producer price index going up, but it was actually slower and lower than what anticipated. Just to provide a better perspective, in the 12-month through September, the PPI accelerated 8.6%, the largest year-on-year advance since November 2010. Tech stocks were pushed higher by value in semiconductor stocks on Thursday. Taiwan Semiconductor Manufacturing, which is symbol TSM, reported better than expected third quarter results. Apple, Google, Facebook, Microsoft, and Amazon were all in green, so you will kind of climb back up from the environment on Monday and Tuesday. There was kind of have volatile, and actually some of them were down because of the pressure of the high yield curve, over 1.6%. The market further driven by good unemployment data indicating solid economy recovery. The number of Americans filing new claims for unemployment benefit dropped below 300,000 last week for the first time in 19 months. Because of that, Dow Jones Industrial and the result rose 380 points, 1.09%. The intraday rose as much as almost 500 points, but slipped back for profit taking. Nasdaq was up 0.5%. S&P were up by 0.75%. Benchmark, just to change the subject about switching back to the gas price again. Benchmark European gas prices are up more than 350% this year, trading about $31 per MMBTU on Wednesday, although down from last week's spike about $52. The retreat came after Putin, which is the Russian leader, offered this week to wrap up Russia's gas export to help use Europe energy crunch. Again, this is why I'm concerned and talk about the energy prices. I mean, despite you can see and want to bet that the price continue to going up with the trend like this with oil, you never know what happened to the market next, what they agree upon with the leaders to drive the price back down to more reasonable. In fact, if you've heard about the campaign about Biden have been talking about, inflation pressure, which gas is part of them. So you're saying, hey, you know what, why gasoline have gone up so much this year? We really need to do something, increase production whatsoever, to try to drive that down so that, the consumer will feel a little bit more relief. Which is kind of really strange and odd. Normally, about end of August, you see gasoline price should have cooled off because, it will switch into heating oil, other energy. But because now talking about, if we don't have enough power, we have to do alternative fuels to figure out how to continue to produce and make sure people have heat and stay warm. So then, oil price also pick it up because of that. Market participants are now closely watching increasing inflation level. The possibility the Federal Reserve might reduce its monthly bond purchase and lately also concern for federal debt ceiling. Of course, the debt ceiling seems to be already compromised and things were looking good. That's why Friday the market was also going up so much. Really, meaning what that translates to, America, the government can print more money, but we'll see, in theory, it's a bad thing printing more money, but we see the economy continue to stay strong and the stock market continue to stay up. So, which really have to get down to maybe somebody will develop a new theory to explain that. Going forward, banks' earnings will benefit from higher interest rate. Federal Reserve signaled that after its September meeting, they was ready to start reversing its pandemic stimulus program in November. JP Morgan, America's biggest bank, see third quarter trading investment banking result to be better than the firm's early forecast. Like I said, that was really driving. And Goldman Sachs were doing really very strong performance, also exceed expectations. That's why it did well. I saw the article saying that Bank of America will increase salary to $21 an hour. I'm not sure how accurate it is and how they anticipated to calculate the figures or when they're actually going to be in effect, because company always making big announcement, but you never know when they happen. It is good to refer back what happened the next 2 quarters during earnings season. Again, if you have time, try to go look back to some article from last quarter where they talk about, look at the graph, and especially of the stock that you have, if you want to analyze and set it by the technical perspective, because the fundamental perspective is whether they make more money, exceed expectation, not, and how they outlook and look for the foreign next year. The market would most cases push high with anticipate strong earnings at least for the coming week. I see that. But when the FAMG announced the earnings, it's normally pull back. So some stock, Apple, like announced earnings, will push Apple going back up one day, and then you see Apple slip. That's always like a trend for some odd reason. Microsoft have been really doing pretty poorly. So when last quarter earnings announcement actually hit up because with the export sales, it's actually driving up to here where we are now, $300 a share. So Google also have been going up, then you come back down, and then now with the time of the quarterly, you drive to almost record high again. So sometimes you have to watch and look at whether you're short term or you're looking long term or how you're investing. Regardless, these stock really definitely making money, profit making. They're reporting futures, how they're looking with the high tech in the future per se. And the way you realize if you have your phone outdated, you must change the iOS in order for that to operate and supporting your phone or wherever you're using. You really understand, you kind of coming from why you understand these stocks continue to make money, because you don't have a choice really. If you don't buy the new one, it's outdated, then the phone or wherever you have can crash, right? So it's getting close in November 11th. So I hope Pinduoduo, which is what I covered earlier on the slide, will be another strong winner this year. Cruise lines were down this week, but I think when you get to holiday season, the stock will perform better. For a long run, I'm still optimistic about my pick. And if you decide to hold high test stock, again, it's important to look at holding the one that's profitable or something that you really think they have a business partnership that will stay strong and will have future, whatever they focus on developing it as a growth stock. And also, you can also see the EV stock went up as well. So I hope there will be good news announced by HYLN at the conference call November 1st. I'm also surprised since I talk about Tesla, the stock went up again, falling with Bitcoin over $60,000. So the futures now obviously not calculating quite right, but taking the last Friday ending price he calculated, so it's kind of inflated a little bit, which is kind of positive, way positive. Went up 407 for Dow Jones Industrial Average futures. If next year when the Asian market open up, then Asians market will probably buy some stock to ahead of the curve. So then you will be more better reflection. But I'm really thinking with the strong earnings anticipated, with the FANG and so on, we will be continue seeing the stock, as long as the yield curve, again, the key thing is the yield curve state remains now 1.53 or even lower, going a little lower, which I couldn't explain to you why it's up and down on that yield curve and so sensitive. What was the really drivers? Because I'm not an expert in that area. Then you will be actually making that, giving that as a condition, the market should be, continue to look good, and Nasdaq may be, continue pushing it up. So investor again should be very mindful about the curse of October, because we still have 2 weeks to go. So you never know. If you go back to look at the month last time when there was a curse, which I don't remember if it was the month of May or April. I mean, everybody think, hey, this time you may be actually break a record and we'll be looking good. Well, then what happened is the last 3 days of the trading day, if the market have a correction, huge correction, and drop 5% in 3 days, which, typically meaning keep dropping 2 or 3%, and then another 1%, another 1%, and then still there. And that time people start to really panic and really profit taking or, sell off. So right now things are looking good, so maybe have another week. I would say watch for the earnings. That momentum can be dry, but it can be actually really flops and turns. So investor, you got to be careful, position yourself the best you can to get ready for that. Meaning that if you're holding a stock long enough, you don't think it's good, maybe now is a good time to switch as well to something that fundamentally is strong. Hope they're helpful, and hope you'll have a wonderful weekend. If you have any questions, send me an email, and hope everybody will continue to make money in this market. Thank you.